Welcome everyone, this is Professor CA Rohit Shroff and I welcome you on behalf of JK Shah Classes. In this video, we are going to cover your RTP of say November 24 for the subject of audit. So we will keep our discussion crisp. I understand you are in the last leg of your preparation and we will keep the discussion as crisp as possible. We will have a discussion in two parts. One is MCQs and one is descriptive. MCQs, couple of MCQs, I would suggest please go through the MCQs, a good tricky questions. So you need to go through the MCQ part. For the descriptive, you can read the question. I would suggest all the questions that I have given, even if you are aware, try to revise the same, try to memorize at least those questions and then move ahead. So without wasting any time, let us jump on to our discussion of the MCQ. So question number 1. Multiple choice question, that is an integrated case scenario. So you can pause the video, you can read the whole case study and then solve the questions. I will read the whole case study once. Now Comtech Limited is a top 1000 listed entity on the BSE by the market capitalization for the past 2 years. So a lot of people, a lot of professors suggest go to the question and read the relevant part. A lot of times eventually you end up investing the same time. I will suggest read the whole scenario first and then go to the question. So here it is top 1000 listed entity on the BSE by market capitalization for the past 2 years. Sells IT related equipment directly to consumers through website. One day, the CFO of the company received a video call from the managing director instructing him to transfer 90 lakhs to the bank account of NXT Limited. When questioned by the CFO, the managing director explained NXT's products are fast moving and contribute 30% to the company's revenue. Further, amount of payment is within the approved limit and can easily be remitted without any further approval. Satisfied with the explanation, CFO made the necessary transfer. So 90 lakh transferred to NXT Limited. At the end of the month, while preparing the bank reconciliation statement, the CFO realized that 5 incremental payments of 90 lakhs each have been made to NXT Limited. These payments were unreconciled and does not have any corresponding entry in the books of accounts. So in the bank, there is a transfer, however, no entry in the books of accounts. CFO explained the situation to MD, reminding about the video call that instructed him for the payment. However, MD denied making such video call. He said, I did not make any such video call. The CFO and the managing director engaged a forensic expert who observed that the company had a cyber attack using sophisticated AI tool. So it was probably a deep face video or whatever. The opposite person managing director did not make an actual call. This was a cyber attack. Investigation further revealed that the video call of the CFO was fake and made from laptop non-owned by the company. Hackers gained the information on the CFO's laptop and have obtained bank details in its authorization information. The company filed a complaint and reported the incident to the appropriate authorities. During the risk assessment procedure, the auditor determined that the IT possesses a significant risk. The auditor assessed that principal financial system used in the preparation of financial statement were compromised during the cyber attack. The auditor focused on the judgments made by the management related to known security incident. Auditor made inquiries with the risk management team and with the chief information officer to understand their assessment of the cyber security risk and measures to mitigate the risk, focusing on the principal financial system used in preparation of financial statement. The auditor also communicated with those charged with governance about the cyber incident. After completion of the necessary procedure, auditor felt that it had incurred additional effort to the tune of 20%. So he had to take a lot of extra efforts. So somewhere this matter is turning out to be a key audit matter where he has to take extra additional efforts. Auditor reviewed the assistance of specialist management assessment of potential impact of principal financial systems used in preparation of financial statement. Management of the company was impressed about the level of detail and the diligence employed by the auditor while dealing with the cyber security incident. They particularly appreciated in-depth knowledge of the auditor, timely involvement of the IT specialist by the auditor, and experience in dealing with the cyber security. The management felt that auditor would be right fit for conducting a thorough audit of the IT systems of the company. So they want him to be conducting IT system audit. In order to leverage the auditor's expertise, management proposed to engage the auditor to conduct system audit. The stakeholders of the company believe that the integrated reporting as prescribed by the International Integrated Reporting Council should be prepared by the management. The primary purpose was to explain the providers of financial capital how the company creates, preserves or erodes value over time. The integrated report would provide relevant information, both financial and other benefits of all stakeholders interested in company's ability to create value over time, including the employees, customer and business partners, local community, legislator, regulators and policymaker. Now, on the basis of the above mentioned facts, you are required to answer the following MCQs. In the given case, cyber attack encountered by the company is known as spoofing, denial of access service attack, malware, identity based attack. Now, see, this is not a DOS attack. What is a DOS attack? For example, let us say a lot of people, let us say if there is your BCom result, okay, you are not sure whether you pass or fail, you are very scared. You attack a DOS, you launch a DOS attack on the website of that particular university. So that server is down, your result does not open. That is DOS. Here there was no DOS. Malware means a malicious software. Here there is no malicious software that was introduced. Now you will be confused between spoofing and identity based attack. Now my friends, in case of spoofing, you try to represent someone else. For example, let us say in case of Kaun Banega Crorepati, for example, someone is calling you and acting as he's Amitabh Bachchan that you have won 1 crore rupees. You have given the correct answer. You give us your bank account number details. We'll transfer 1 crore to you. This is spoofing. In case of identity based threat, what happens? For example, let us say I had created an account on, let us say, Book My Show. Okay, for example, let us say I wanted to buy Coldplay tickets. I created my account. My ID password of Book My Show and my ID password of my bank is the same. Now, for example, let us say Book My Show ID password and everything. For example, let us say it was late and it was available to public. Then in that case, the hacker, what he will do, he will use my ID password of Book My Show for my bank account and access that. This is identity based threat. Here this did not happen. So answer here is going to be spoofing, where it was a deep fake video where using AI, representing him as a MD. So answer here is going to be spoofing. The engagement partner is confused as to whether the audit report would be impacted by the cyber attack instance. What is the appropriate reporting? So now in this case, we will have to give a key audit matter. Why? Because it was one of the most significant matter where we had to invest more 20% of the efforts. So answer here is going to be communicate what? A key audit matter. Next, the company wants to prepare a good question, an integrated report as contained in the International Integrated Reporting Council endorsed by SEBI. Now, this is integrated report. This is not BRSR report. The company secretary of the view that integrated report is mandatory for listed. Which of the following is correct? Now, see, BRSR is applicable for 1000. Fine. Okay. So, here A cannot be the answer. Now, the view of the company secretary is incorrect because it is voluntary for top 500. Yes, answer B is the correct answer here. Next, in the 1000 is not correct. Yes, it is for again 1000. So, answer here is 500. 1000 is for BRSR. They are talking about integrated. So, answer here is going to be B. Again, integrated reporting comprises 6 categories of capital. Company observed that the capitalized intangible assets, that is patents and rooftop solar equipment in the balance sheet. In the integrated reports, patents and solar equipment should be disclosed as what? See, patent is nothing but something that is intellectual capital. Solar is nothing but something as natural capital. So, answer here will be what? C. Next, can the auditor accept the system audit as offered by the Comtech? So, we can accept the system audit. Okay, but we could, so here the statutory auditor can accept the assignment provided does not involve scrutiny review of financial data and information. See, now for example, if it involves financial data and information, you are yourself the IT officer for that particular thing and you are auditing the financial data and information that you receive from that particular IT, then it will create a self-review threat. So, your answer is going to be what? A. Fine. So, we are done with the first integrated case study. Moving ahead with the independent MCQs. Now, CA Vijay qualified as a CA in November 22, started his professional practice in Delhi. Since he has enough time to devote on other activities, he is considering the following 4 options. Part-time tutorship under the coaching organization of the institute. Can he do so? Yes. editorship of journals other than the professional journal, he can do, provided he has a special permission for the same. Acting as a recovery consultant, yes, he can do so. Next, owning an agriculture land and carrying out the agriculture activity, can he do so? Yes. Do you think CA needs to take specific permission or prior permission of the council? So answer here is going to be A. Prior permission is required for editorship of journals. Next, CARK, the auditor of Shipra Limited, resigned from the post due to personal reasons. CASP was appointed as the subsequent auditor of the company by the board of directors. During the conclusion of the audit for the 23-24, should CASP mention CARK's resignation in the CARO? So does he have to mention the same? Yes, he will have to mention under which clause? Clause 18 of para 3 of CARO 2020. Moving ahead with the last MCQ. So integrated case study, a few interesting questions, but independent questions are comparatively very easy. Now, SMN Limited is a management consultancy firm and in operation for last 15 years. Company's financial reporting process is sound and its statutory auditor has issued a clean report on the audit of financial statements of the company since inception. Due to mandatory audit rotation under the Companies Act, MNO and Associate was appointed as new auditor for the financial year 31st March. During the audit, MNO Associates performed procedures on both current year's financial and opening balance. No significant issues have been observed during the audit, and the auditors intend to issue a clean report. They include other matter paragraph in the draft report, noting that the previous year's financial were audited by a different auditor. Management requested the reference to be removed since MNO and Associate audited the opening balance and such a reference is not required. However, the auditors did not agree with the management. Please advise the auditor or management whoever is incorrect. So here this question is talking about SA 510. Initial audit engagement. If it was audited, previous year was audited by some other auditor, we need to give other matter para stating that it was audited by a predecessor auditor. So here in the situation, the report of the auditor is correct and is in line with the standard on auditing. An auditor is required to include such reference in the other matter paragraph which require referencing of the previous auditor when applicable. So with this, we are done with our discussion of the MCQ. So like I said, the integrated case study had a few questions, which were interesting, but the independent questions are comparatively easy. So with this, we put an end to our discussion of part A, that is MCQ based question. So let us move ahead with our discussion of the descriptive questions. So now in this descriptive question, there are almost 13-14 questions. Try to memorize all these questions here itself. So once you are done with, viewing one question, you see whether you are able to interpret and revise this question here itself and then move ahead to the next question. Now question number 9. What is question number 9 saying? RPS Limited and its annual general meeting appointed Mr. R, P and S as joint auditors. So joint auditor SA 299 to conduct the audit for the financial year 23-24. For the valuation of newly constructed infrastructure project of the company, R, P and S decided to consult their own engineers. So basically they are appointing expert. So here joint auditor SA 299. Here they are appointing an expert. So this is SA 620. Due to the difference of opinion, each joint auditor sought advice from their respective engineers. As a result, significant discrepancies were found in the valuation reports by the engineer. However, Mr. R agreed with the valuation report provided by Mr. P's engineer, while Mr. S did not. R argues that the report of Mr. P's engineer should be included in the audit report due to the majority of the votes. Now, Mr. S is in dilemma. What would be your responsibility of the auditor if the report provided by engineer is found to be faulty? So now when you read the question, because of this particular line, you might think this question is talking about SA 299, big majority of the votes. So in SA 299, every auditor gave his separate report. But here you focus on the last line. What is the last line asking you? What is the responsibility of the auditor if the report provided by Mr. P's engineer is found to be faulty? So here they are asking answer in context of SA 620. So the first point is to identify it is which standard, because if you end up writing as per SA 299, you will not get any marks. So this is SA 620. So whenever you use the work of an expert, Here you will have to start your answer as per SS 620 using the work of auditor's expert. Then you will have to write as an introduction where we can use the work of the auditor. For example, we can use it for the valuation of what complex financial instruments, land and building, machinery. So it is just an introduction of where all can we use the work of the expert. Next, in the second paragraph, we will have to write that auditor shall evaluate the adequacy of the expert's work. If you recollect, in the textbook, in the notebook that we had written, whenever we want to evaluate the adequacy, we will have to check CAs. So firstly, we'll have to check the expert's findings and conclusions. Then we will have to evaluate the assumptions that they have used. And lastly, we'll have to evaluate the source data that you are using. So we will see, to check the adequacy, we have to check their conclusions are appropriate. We have to evaluate the assumptions and also the source data. So we'll have to write this. Then in this case here, they have given what has happened in the case and all. In the situation, it was the duty of Mr. R, P and S, before using the valuation report provided by engineer, to ensure the relevance and reasonableness of the assumptions and the method used. So they have to evaluate the adequacy. They were also required to examine the relevance, completeness and accuracy of the source data used for such report before expressing an opinion. Here Mr. R and P will be held responsible for a gross negligence and using such faulty report without examining the adequacy of the engineer's expert work. So here the main points are this point, where you have to write how are you supposed to evaluate, and in the conclusion you will have to write, since they have not evaluated their work, the adequacy of their work, they will be responsible. Because if we use the work of an auditor's expert, we need to evaluate whether their work is adequate or not. Now if you see, since the question was asked if the report provided Mr. P's engineer is found to be faulty, so it was focusing on 620. But for example, if we were supposed to talk about professional ethics as well, here since there is gross negligence, we can also talk about clause 7. So we can also talk about clause 7 part 1 of the second schedule, that since there was gross negligence, they did not examine everything. So here if professional ethics was to be included, we would quote that point as well. So this was SS 620. Next, materiality, risk assessment and internal control. AMRO is a manufacturing and a trading company of leather goods since last 10 years. You are the internal auditor of the company for the year 23-24. In order to review the internal controls of the company, you visited the department and noticed. What did you notice? The head of the procurement, Mr. Amit, has complete control over purchasing, receiving goods and approving the payments to supplier. His actions are not reviewed by any other party. Is this appropriate? No. So one person should not have a complete control. His work should definitely be reviewed by someone else. Second, the company staff has been working in the same roles over 5 years without any rotation. The finance manager, Sachin, is in particular, has never had his duties rotated since the joining of the company. There should be job rotation. For example, as a kid, if you have ever been to a bank, well, while I was a kid in my 10th standard vacation, my father used to, give me a passbook and ask me to go and update his passbook in a bank. While I used to go, there was a point of time that one lady was a cashier. After 2 months, when I again revisited the branch, I saw that same lady who was a cashier. Now, for example, she's sitting in the Demat account, she's updating things. After a year when I visited, she was doing some other job. So I was very confused as a kid. What is happening? Are they playing a musical chair? Whichever seat is available, they are sitting there. Then later I understood that is a job rotation, because if the same person keeps on doing the same work, there is a possibility that he may override controls, commit a fraud. Hence, there should be job rotation. Third, the store manager, who is responsible for maintaining inventory, also keeps the record. So who has access to the physical assets should not maintain the records. So controls are not appropriate. But let us read the question. Briefly discuss the general conditions pertaining to the internal check system to ensure by you as an auditor. So in general, they are asking you what are the internal check systems that you should have. Do you think that the general conditions pertaining to an internal check are violated? Definitely, in all the 3 cases it is violated. But let us read this A answer. So internal check system, what should we do? The general conditions pertaining to the internal check system may be summarized. No single person should have complete control over any important aspect. Every employee's action should be under the review of another person, so no one person should do the job. Staff duties should be rotative from time to time. Next, every member of the staff should be encouraged to go on leave at least once a year. A lot of times in MNCs and all, you might have heard a concept called as cold leaves. So he is motivated to go on leave at least once a year for at least 7 days, 15 days. Because when he goes on leave, someone else will come in his shoes. If he is committing a fraud, it is easy to unearth that particular fraud. Persons having physical custody of assets must not be permitted to have access to the books of accounts. Next, there should exist the accounting controls in respect of class of assets. In addition, there should be periodical inspection so as to establish the physical condition. Mechanical devices should be used wherever practicable to prevent loss or misappropriation of cash. So you should not do manual counting. Wherever possible, you should have equipments, you should have technology to count it. So manual error element is eliminated. There should be budgetary controls. In case of budgetary controls, if there are deviation, we should try to reconcile also those deviation. For inventory taking at the close of the year, trading activities if possible should be suspended. So when I'm counting the inventory, that time there are additions, there are, for example, we have dispatched the goods, it will be very difficult. So the trading activities for that particular point of time should be suspended. The financial and administrative power should be distributed very judicially among the different officers. Procedures should be laid down for periodical verification and testing of sections of accounting records to ensure that they are accurate. Right? And the second part, we have to tell them, okay, in all the 3 cases, the controls were not appropriate. The head of the procurement, Mr. Amit, having complete control over procurement without oversight, violates the principle that no single person should have a control. So this violates the first point that we discussed. Second was about job rotation. So second point, we'll write that there was no job rotation for a long time. And lastly, we'll write that the person who has the custody of the inventory cannot maintain the records. So this was our question number 10, that is materiality, risk assessment and the internal control. Next, question number 11. Mudit and Associates is appointed as statutory auditor of GRF Private Limited for the financial year 23-24. The company is into the business of health club, fitness center and gym costume. CAM is the engagement partner of the audit assignment. CAM observed the following point. The customer base is reducing continuously due to tough competition and discounting war existing in the market. Payment creditors are delayed and is made with overdue interest. Company has not been able to pay salary to the staff and the trainers. Key financial ratios of the company like current ratio, debt service ratio, and are in red and have deteriorated considerably as compared to the past year. The company has requested its banker to provide it with additional working capital of 1.5 crores, but the bankers are not considering the company's proposal favorably. What procedures should be followed by CAM considering the above circumstances as per going concern? How the auditor should deal if the going concern basis of accounting is appropriate but material uncertainty exists and the disclosure of material uncertainty is made in the financial statement. So now they have only made it very simple for you. They are telling you that there is material uncertainty. See, here I cannot say going concern is inappropriate. Are we sure that the company is going to shut down in the next year, in the near future? No, here there is a doubt. The customer base is reducing. They are not saying that there are no customers in the market. They are not getting any customers. Payment of the creditors is delayed. They are not saying that we are not able to pay to the creditors. Company has not been able to pay salary to the staff on a time. So here there is an indicator. There are a few indicators, financial operating indicators, because of which there is a material uncertainty. We cannot say the going concern is inappropriate. So here, if there is a material uncertainty, they have to give the disclosure. If they cannot give the disclosure, we may have to modify our opinion. So here, whenever there are material uncertainty exists, what are we supposed to do? Firstly, where the management has not performed an assessment, we will ask them to make an assessment. Then we will evaluate the management plan for future action, whether the outcome of this plan is likely to improve the situation and whether the plans are feasible. For example, let us say if they are saying, okay, we will take an additional borrowing. Now, for example, let us say bank is not giving them additional borrowing. They are taking unsecured loans. But the unsecured, the lender from whom they are taking the borrowing is charging, for example, 15% rate of interest. So, this may not improve the situation. This may worsen the situation because this will increase the financial burden on the company. They will have to pay more interest. So, here, whenever they come up with a future plan, we need to evaluate whether this will improve the situation. Is it even feasible? Is there someone who's actually lent the money to the company? Now, we will not rely, if the management hypothetically comes and tells us, no, we'll continue in the future, we'll have a lot of profits. We will ask them to prepare a cash flow forecast. But when they come with a cash flow forecast, will I blindly trust that forecast? No. Firstly, I will evaluate the reliability of the underlying data. If the underlying data, if the data of the current year or whatever they have used is inappropriate, the forecast will also be inappropriate. Secondly, whatever assumptions they have used, for example, let us say they are saying every year on year basis their revenue will grow by 2 crores. On what basis are you saying it will grow by 2 crores? Okay, for example, they have an assumption that every year they will come up with one new center, one new gym. Because of one new gym, the revenue will increase by, let us say, 2 crores. So I need to evaluate the assumption, whether there is adequate support for the assumptions they are using. After this particular assessment, I need to evaluate whether any additional fact or information have become available. So when they made the assessment, maybe the going concern was appropriate, there was an uncertainty. But later on, an additional fact became known to them because of which they think the going concern may be inappropriate. At the end, I will also ask return representation from the management for what are their plans for the future and whether there is a feasibility of this plan. So I will obtain a return representation because all this is future. So you give it to me in writing. What are your future plans and are they feasible? Because right now you make me big promises. Later on, if you don't fulfill those promises, what evidence do I have? So for all the future promises, I will ask them to give me a return representation. Now, then in the given case, as per all these points, you can write as per the given case. For example, let us say we have to review the management's assessments, examine the challenge and reasonableness of the company's cash flow forecast, review events after the reporting period that might affect the going concern, analysis of financial ratios, company's challenges, assess the impact of declining customer base, delayed payment. So you can write all these points based on the cases. Further, if adequate disclosure about the material uncertainty is made, auditor shall express an unmodified opinion. Why an unmodified opinion? See, they have given the disclosure. If the management fails to provide a disclosure, I will have to modify my opinion. But if they give the disclosure, I will not modify my opinion. But now I will have to write material uncertainty related to the going concern. See, this is kind of emphasis of matter para. If you recollect emphasis, we want to draw users' attention, but emphasis is not a substitute for going concern para. So whenever there is a material uncertainty, rather than giving emphasis, we'll give a material uncertainty related to going concern para. It is similar to emphasis. Here we will draw attention to the note in the financial statement. So basically we are giving a cross reference and we will state that our opinion is not modified in respect of this matter. So this was our essay 570. Next, question number 12. The extract of the financial statement of Next Limited for the year 23-24 is as follows. Trade receivable unsecured 225 crores. Next, provision for bad debts is 50. Stock of raw materials is 180. Stock of finished goods is 250 and total assets is 950. C.A. Yash is the statutory auditor of Next Limited for the year 23-24. During the course of audit, C.A. Yash noticed the following. With respect to the debtors amounting 175 crore, no confirmation was received by the audit team. Further, there have been default on the payment obligation by the debtors on the due date under audit. Company has created a provision to the tune of 50 crores during the year. Company has stated that provision is based on receivable which are older than 36 months. So, if the debtor is less than 36 months old, no provision has been created, which according to the audit team is inadequate. So if someone who is not paying for more than 12 months, 24 months, there also a provision has to be created, right? But here they have not created any provision. As such, the auditor is unable to ascertain the carrying value of the trade receivable. Can I say the auditor does not have SI for trade receivables? Yes. So this is for around 175 crores. Next. Further, in respect of what? Inventories, which constitute 45% of the total assets of the company. Total assets is 950 and this inventory constitutes 45% of the total assets. During the reporting period, management has not undertaken a physical verification of inventory at periodic intervals. The company has not maintained adequate records, so no adequate records are also maintained. The audit team was unable to undertake physical count of the value of the inventory, could not be verified. So can I say here also auditor does not have say? See, here in both the cases, here they did not have say for datus, here did not have say for inventory. So now what kind of opinion should CA Yash give? So here they are asking what opinion? One question. Second, draft a suitable opinion para, draft a suitable basis for opinion. First, let us discuss the first point, which opinion. When the auditor does not have say, we have two options. If the matter is material and pervasive, we will give a disclaimer. If the matter is material but not pervasive, we will give a qualified opinion. Here we do not have evidence for datus 175 crores, for inventory which is 45%. So individually datus may not be pervasive, but when I take in aggregate, it is pervasive because it is not affecting one element, it is affecting multiple elements, and it is a substantial proportion as well. So I will end up giving which opinion? A disclaimer of opinion. So here in this case, the auditor will have to give what? Disclaimer of opinion. Now we will have to write the opinion para and we will have to write basis for opinion. If you recollect our lectures, for opinion para we have made a table where we know how to write every para, for example qualified, unmodified, adverse and disclaimer. So it is going to be very simple. We do not express an opinion on the financial statement of Next Limited because of the significance of the matter described in the basis of opinion of our report. We have not been able to obtain a SI to provide a basis for our audit opinion on this financial statement. Now for basis for opinion, you need not, take a lot of efforts because whatever is given in the question, you just need to, rewrite those things. So here in the basis for opinion, you will write whatever is given in the question. So this was which opinion will you give? How will you write an opinion para and basis for opinion para? Now, prospective financial information and other assurance services. So now Mr. Vineet, an auditor, has been approached by Cube Limited to examine the prospective financial information of the company. What factors should an auditor consider before accepting an engagement to examine prospective financial information? And under what condition the auditor should decline or withdraw from such an engagement? Additionally, what steps should be taken to formalize the terms of engagement? To a very simple answer. So let me take you to the notes. So before you accept such an engagement, firstly we need to understand what is the intended use of this information. Information, whether it will be for general or a limited distribution. What are the nature of assumptions that you are using, whether it is a best estimate, that is a forecast, or whether that is hypothetical assumption, that is projection. What are the elements that are to be included and what is the period to be covered. But now for example, let us say if the assumptions are unrealistic, then we will not accept or we will withdraw if we have already accepted. Now to formalize, the terms of agreement should be agreed with the clients by sending the engagement letter. So a basic question. This was prospective financial information. Next, digital audit. Mr. Karan is a consultant tasked with helping a mid-sized manufacturing company to modernize its operation by integrating Internet of Things. So IoT, what they are talking about is IoT, for example, your Alexa. The company wants to connect various devices such as manufacturing equipment, smart home security system for their facility, and the inventory management system. They aim to leverage IoT to improve operational efficiency, predict equipment maintenance needs, and enhance the overall security. However, they are concerned about the potential risk and impact on their audit processes. Describe the key components and benefits of IoT. Also, the risk associated with IoT implementation and implication for the company's audit processes. How should the company address these concerns to ensure smooth transition? So let me again take you to our notes. So here firstly you will have to write about what is IoT, the introduction of IoT. Then what are the common risks? See, for the common risk, the risk associated with IoT is what? There can be a device hijacking, that can be data siphoning, there can be DOS attack, that is denial of service attack, data breaches, and there can be a theft. Now, what will be the audit implications? So, whenever there is a shift here, we will not be able to rely on the manual control. See, everything is on IoT, so as an auditor we cannot rely on the manual controls. Now, if I do not have to rely on the manual controls, and if I have to rely on automated controls, I will have to train and upskill my audit team. If they do not know all these things, how does the IoT work and everything, if I do not upskill them, we cannot perform this audit. The audit firm may need to train and upskill the auditors to elevate design and operating effectiveness of the control. Next, I will also consider the payment processing tool that allows the users to pay via credit card at a retail location or through a mobile device. These days we pay via UPI. So now when there is another payment tool available where we can pay via UPI, credit card, debit card, then there is a new path for incoming payments that may rely in part on a new service provider supplying and routing information correctly. The auditor would need to consider volume of those transactions and process and controls related to it. So this was answer about what? IoT, that is Internet of Things. So the questions which are already there, which are straight away there in our notes, I am not wasting your time on that, but I would request you pause the video and memorize this question any which ways you are supposed to revise it. Next, moving ahead with question number 15, group audit. You are appointed as auditor of Imperial Industry Limited, a company with a turnover of 3.5 billion, operating through 15 business units and nearly 200 branches across the country. The Imperial Industries Limited is a key supplier to American building and construction market. As an auditor, how will you draft the report in the following cases? When the components of audit report of the financial statement are under accounting framework different than that of the parent. When the components auditors report under an auditing framework different than that of the parent. When the financial statement of one or more components are not audited. So here, let me take you to our notes. For example, if the financial statements are under a different framework than that of its parent. So there are two cases. The framework applicable to the component and the parent are different. Scene 1, parent's management performs the conversions. So what they will do is the component financial statement are converted to get it at par with the parent. Then in that case, what are the conversion adjustments have to be audited by the principal auditor to ensure that the financial information of the component is suitable and appropriate for the purpose of consolidation. Now, second case may be the component prepares the financial statement on the basis of the parent's accounting policies outlined in the group accounting manual. So now the component is making the financial statement as per the parent's accounting policies. So whatever the accounting policy will be written in the group accounting manual, they will prepare as per it. The local component auditor can audit and issue the report on the component's financial statement whether they are prepared in accordance with the group accounting policies. Now, when applying this approach using the group accounting policies, the financial accounting framework of the component, the principal parent auditor should perform procedures necessary to determine whether the group accounting policies are followed or not. The principal auditor can then decide whether or not to rely on the component's audit report and make a reference to the same in his audit report. Next, second point, when the components auditors report under the auditing framework different than that of the parent. So if the auditing framework is different, then we will ask them to audit it as per the Indian gas, that is Indian auditing standards. So it should be audited. If it is different, then we will ask them to audit as per the Indian standards on auditing. Next, last point, if there are certain components which are not audited, if it is not audited, then we need to evaluate. If it is not audited, what is the pervasiveness? We need to evaluate whether it is material. If it is material, then in that case we have to modify our opinion as per 705 because the auditor is not able to obtain say. It is material and pervasive, will end up giving a disclaimer of opinion, whereas if it is material but not pervasive, will give a qualified opinion. So this is components which are not audited. Right? So this was our question number 15. Next, question number 16, bank audit. Your firm ABC and Associate is appointed as central statutory auditors of a nationalized bank for the year 23-24. The bank allows the financial year as an accounting year. During the audit, CA Adi, the audit manager, has noticed the following issues and placed the same before the team. Consortium cash credit facilities. I hope everyone understands consortium. What is a consortium? For example, let us say Mukesh Ambani ji needed, for example, let us say 5,000 crores. So now, for example, when he needed 5,000 crore, he went to Axis Bank. Axis Bank said, I do not have 5,000 crores in hand right now to give you, but I can, no problem, I can arrange. For example, Axis Bank himself gave, for example, let us say 1,500 crores. He got Bank of India. Okay, Bank of India also gave 1,500 crores. He got Canara Bank. They also gave, for example, 1,000 crore. They got Dana Bank. They also gave 1,000 crore. So these 4 banks came together and gave 5,000 crores to Mukesh Ambani ji. These 4 banks will be called as what? Consortium. So there is a consortium cash credit facilities to Prime Limited of 75 crores. Bank's own share in this credit facilities is 15 crores. So in the whole consortium, this bank is giving 15 crores. Debit towards the interest in the last 2 quarters is 2.25. However, credit in the Prime Limited account is 1.75 crores. So interest debited is 2.25, but however, they have received only 1.75. Classification of Prime Limited accounts based on the lead bank certificate, they have classified as a performing asset. See, basically this is cash credit. So let me explain you in case of cash credit. Firstly, we need to see whether the sanction limit is exceeded. If the sanction limit is exceeded, we will classify as NPA. If the sanction limit is not exceeded, what we will see whether there are credits or whether there are no credits. If there are no credits, then in that case we will classify that as out of order, that is NPA. But if there are credits, we will see whether the interest is recovered or the interest is not recovered. If the interest is recovered is okay. If the interest is not recovered, we will again classify this as out of order. Here the interest debited is 2.25. However, we have received only 1.75. So this has to be treated as what? NPA. But however, based on the lead bank certificate, they have classified as performing. We don't classify this on the basis of lead bank certificate. It is to be classified on the basis of recovery. Since there is no recovery, we will have to classify this asset as NPA. So here we will classify the asset as what? NPA, because there was no recovery. The amount should be shown as NPA, that is a non-performing asset. Next, question number 17. Rishi is appointed as internal auditor of SPOM Limited, a medium-sized manufacturing company, while CA Nitin is the statutory auditor of the SPOM Limited. During the review, Rishi notices several discrepancies in the disbursement records and suspect there might be weakness in the internal control system. Additionally, there have been recent changes in the business policies he was not informed about. Rishi is concerned about maintaining independence and objectivity while ensuring the management is aware of these issues. What are the responsibilities of Rishi as an internal auditor with respect to the accounting function and financial records of the organization? Also, CA Nitin asked Rishi to provide direct assistance to him regarding evaluating the appropriateness of the management's use of going concern in the view of the standard on auditing, which standard SA 610, whether Nitin can ask direct assistance from Rishi as stated above. So now for the first question, what are the responsibility of Rishi as an internal auditor? So as an internal auditor, the responsibility of Rishi are to ascertain adequacy of the internal control system by continuous examination of accounting procedures, receipts, disbursement. Next, he has to operate independently of the entity and the account staff, and he should not, divest himself in the response, because if he is involved, whether he will be, there will be a self-interest threat, right? There will be a self-review threat rather. So here he should operate independently. He should not involve in the performance of any executive functions. He should observe facts and situations that bring to the notice of the authority who would otherwise never know them. He should associate very closely with the management, because if he associates with the management, he will get all the up-to-date information, all the important occurrence of events and events affecting the business. And all times the internal auditor must enjoy the independent status. So he should be independent. So these are the responsibility of Rishi. Secondly, they are asking, can they use Rishi to provide direct assistance? So there are certain areas where we cannot use direct assistance. For example, whenever significant judgment is involved, can we use a direct assistance of the internal auditor? No. So here he is using to evaluate the appropriateness of the managed measures of going concern. This is a judgment. So wherever there are significant judgments, we cannot use him for direct assistance. Where are the judgments involved? For example, assessing ROMMS, evaluating sufficiency of the test performed, evaluating appropriateness of the managed measures of going concern. The question was on this. Evaluating the significant accounting estimate, evaluating adequacy of the disclosure. So since the judgment is involved, we cannot use an internal auditor for direct assistance. So this was our question number 17. Question 18, a basic question. CA Rajul is a designated as credit manager at a branch of AAP Bank Limited. PQR has approached the bank branch with a request to sanction the credit facilities worth rupees 12 crores for meeting its regular business needs. It is a potential new client of the bank. She has reviewed the company's past history, background of the promoters, director, shareholding pattern, and the nature of its business. She also conducted assessment of the financial results of the past and future projection. Additionally, she carried out SWOT analysis. She evaluates the net worth of the directors, checks the CIBIL score, and verifies the names of the promoters or directors appear on the RBI's default list. Further, she makes a discreet inquiry into the few clients of the branch who agreed in a similar line of activity regarding the creditworthiness. Now, based on the above, identify the procedures followed by CA Rajul. What is she doing? CA Rajul is nothing but what they are performing is due diligence. So here, in the first part, you have to explain what they are performing is due diligence and write everything about due diligence. Second question. Would your answer be different if this activity was performed by a person not qualified as a chartered accountant? Can a non-CA perform? Yes. See, this is not an assurance service. So, due diligence can be performed by a person who is not a qualified chartered accountant. So, yes, there would be no difference. It would be performed by a person who is not a chartered accountant. It can be performed by any person. So, there is no harm there. Name any 3 areas where the identified activity can be undertaken. So where can you take due diligence? So areas where we can do due diligence: corporate restructuring, venture capital financing, public offerings. There are a lot more examples. You can write, they have asked 3 examples, hence 3 examples are stated. You can write more examples as well. Fine. So this was about due diligence. Question number 18. Question number 19. Kapil is an external auditor to provide assurance on the company's business responsibility and sustainability report. To ensure the report's accuracy and reliability, he needs to follow a comprehensive methodology that includes several key steps. What are the methodology that he should follow? So whenever he wants to give this BRSR report, firstly there should be a preliminary review, then there should be an on-site assessment verification ESG report, then issuance of assessment and assessment statement, review the responses and clarification on the finding, submission of the findings of the on-site assessment, and preparation of assessment and verification including the final results of the assessment. So this is the methodology that should be followed. Moving ahead to your favorite part, that is your professional ethics. CA Vayu is the auditor of Viva Limited, having a turnover of 200 crores. More than 200 crores. The audit fees for the year is fixed at 80 lakhs during the year. The company offers CA Vayu an assignment of representation before the income tax appellate tribunal for a matter for a remuneration of 1.75 crores. CA Vayu accepted the assignment, discussed with CA Vayu with reference to the provision of the CA Act and the schedules thereto. So now my friends, here you might think, for example, let us say audit fees. The audit fees is 80 lakhs. The non-audit fees is 1.75 crores. Is it greater? Yes. So you may say, no, this is misconduct. No, but if you recollect, let me take you back to the professional ethics. So here, if in case of a PSU, listed company, government company or public company having turnover more than 50 crores, this is not applicable to a private company. If accepts any other work or service with regard to the same undertaking on a remuneration which exceeds the fees payable for carrying out statutory audit, it will be a misconduct. Why? Because it will create a threat to your independence if you are receiving more remuneration for other services, for non-audit services. But however, there are 3 exclusions here. Audit under any other statute, certification work done by the statutory auditors, and any representation before an authority. So here if you read this question, it was for representation. So here there is no issue. Here in this case there will be no misconduct. So here the conclusion, in the view of the provision, it would not be a misconduct on the part if he accepts the assignment of representation before the income tax appellate tribunal for the remuneration of 1.75 crores. Last question. Sanjeev, an associate, a firm of chartered accountant, responded to a tender from a PF office chamber for filing quarterly ETDS return. The term of the tender are as follows. Earnest money deposit, can we give it? Yes, it is 7500. Yes, it is open for all categories. If it is open for all categories, can we apply to the tender? Yes. Maximum fees of 7500. So see, in case of a tender, if we are invited, we can apply. If it is open for everyone, we can apply even if no minimum fees is quoted. But if it is exclusively for chartered accountant, minimum fees, see, maximum does not matter. But now since here it is open for all categories, even minimum fees is not required. So if you get confused by this word maximum fees, you will end up committing a mistake. Here there is no problem. He can apply to the tender because here in this case it was open for all. So can respond to the tender as it is open for all categories, that is open to other professionals as well. So with this we are done with our discussion of the descriptive questions as well. With this, we finally put an end to our discussion of RTP of November 2024. Now, in case if you have any doubts, you can reach out on our helpline, you can text us there. We'll be happy to help you there. Just make sure all the questions are there in this RTP. You revise those questions. Even if you were not able to crack it on one single go, no issues. There will be a lot of new questions. It is just a practice question. So try to revise it, try to memorize it, at least this 20 questions. Thank you very much, my friends. See you sometime soon. Thank you.